Hi everyone, welcome to JAIIB CAIIB English Medium. This side Aarti, and today we are conducting one short numerical. All your AFM important numericals, especially from C and D, we are going to cover, and some numericals from your A and B also. So in this session, good evening everyone, good evening. So if you are visiting to this particular channel for the first time, do subscribe to this channel and like this session, because this channel will help you to achieve 10 to 15 marks from your exam. So do like this session and share with your all friends and colleagues. So remember, this session, for the starting time, I'm going to take, and afterwards Niharika ma'am will continue this session. Okay. So first of all, please confirm whether my audio video all good. Are we good to go? Then we are going to start this session. Please confirm. All good? Please confirm all good so that we can start today's session. Audio video all good? Good evening, Weber sir. Good evening. Chaliye. So before we start this session, I request you all that please use calculator for solving this. Okay, I will tell you what tricks you need to use in this, how you are going to solve different questions also. So please try to use your calculator. Chaliye. So without wasting any time, let's start this session. So this is your virtual library link, which is available in your description. You can use this link and you can watch all the mini marathons related to A, B, C, D, not only for AFM but also for PPB, RBWM. So you can use this virtual library. Along with that, you can access the PDFs of this current classes also. Okay. So let's start with the first question. First question, a company is evaluating a project that requires an initial investment of 7,50,000. The project is expected to generate cash flows of 2,50,000 at the end of each year for the next 4 years. If the required rate of return is 12%, what is the net present value of the project? Here are few options: 25,200, 18,180, 9,337, minus 14,500. Chale, in this you need to calculate the net present value. Please try to solve this. If you don't know how to solve this, then wait for me, I will tell you. If you know it, then please try to solve this. And if you know how to calculate with the help of calculator, then please try to do that also. In this, you need to calculate the net present value. Now, what is net present value? In which you are going to take the initial investment. You are going to take the initial investment and you are going to subtract from this initial investments your cash flow present value. Okay. This is how we calculate the NPV. So if I write the full exact formula, so you can see like this. You can see like this. NPV equal to sum of all present value of cash flow minus initial investment. Correct? This is how we need to calculate. Chaliye. So what is our initial investment amount? As per this, our initial, please try to solve this because next question is quite tough. Okay, this is a very basic question so that you can revise this concept, and after this we are going to solve some what difficult level question. So please try to solve this one. So what is your initial investment? Your initial investment is 7,50,000. 7,50,000. Okay, and what is the present value? What is the present value of cash flow? So you are expected to generate cash flows 2,50,000 at the end of each year for the next 4 years. Now, how you can solve with the help of calculator? Please everyone have a look. So in this they are saying that 2,50,000 you are going to receive for next 4 years. Huh? So generally for discounting, what formula we use? 1 divided by 1 plus r to the power n. So in this, you are seeing that each year you are going to receive the same amount. That too for the 4 years. So you are going to use directly this calculator. So 1 divided by 1.2 1, 2. Your return is how much? 12%. So as you press equal to for the first time, this is your first year present value. The first year present value is 0.89. 0.89. And do remember that there should not be any memory. As you can see, there is a small m. So please try to eliminate that thing. Okay, so for the first year, 1 divided by 1.12, as soon as you press 1, this is your first year present value. You need to use your m plus. Okay, for the second year, as you have seen that second year also you are going to receive the same cash flow. So you are going to press again equal to. And one time only m plus. Again one more time m plus. One more time m plus. Means you have calculated the 4 years present value. As soon as you press the MRC, this is your total value of 4 years. Okay. Then you need to multiply this value with your 3.07 with 2,50,000. So as soon as you multiply this, your answer will be 759,337. As soon as you do the subtraction of this, 759,337 minus 750,000, your answer will be 9,337. Now tell me, are we going to accept this or going to reject this? Tell me, what we are going to do? Are we going to accept this project or we are going to reject this project? Weber sir, please check. So we need to calculate for 4 years. Okay? I think you calculated for 3 years only. So calculate one more year and add that thing. We need to calculate 4 years. So you need to press equal to m plus, equal to m plus for 4 times. And afterwards you need to press the MRC. Okay? So that will be your present value annuity factor. See, what we are doing, 1 divided by 1.12 equal to 1 time, this is for first year present value. Okay? You need to press m plus. For the second year, m plus. Third year, m plus. Fourth year, m plus. As soon as you press MRC, this is the value. This is the present value. Okay? Chali. Now tell me. Are we going to accept this or reject this? Are we going to accept this project or we are going to reject this project? Tell me fast. Don't worry, I'm going to bring one calculator full session also. Don't worry, in that I will be teaching you how to use this calculator. Okay, few calculator tricks we need to apply in our exams. I'm going to bring that session also. Don't worry. Chali, tell me. Are we going to accept this or we are going to reject this? As you can see, we are going to get a profit. Okay, because we are going to earn by investing just 7,50,000. We are going to earn 7,59,337. So we are going to accept this project. Okay, so the correct answer of this question is your option C. Why we are going to reject? This is a positive cash flow, no, sir? After initial investment, whatever amount you are investing, in that you are going to generate cash flows. See, generate cash flows, that to 2,50,000, and their present value is 759, means your return is more than your invested amount. So we are going to accept that thing. Okay, next thing, next question. Chaliye. As I told you, next question is quite difficult, but let's try this. ABC Manufacturing is considering investing in a project requiring an initial outlay of 20 lakh. The project will generate cash flows of 8 per year. Okay? Initial outlay amount is 20 lakh. Per year, 8 lakh you are going to generate for next 4 years. Okay? The company's required rate of return is 12%. Easy. Just like the previous question. Now, the twist arises from this part. However, in year 3, due to market condition, there's a 50% chance that the cash flows will drop to 4 lakh. If the company decides to adjust for the risk by using an adjusted discount rate of 15% for third year only, should they accept the project? And we need to identify which option is correct. use your previous numerical calculation in this and try to solve this. Okay, try to solve this question. Please try to solve this question. As you know, every time one exam will be quite tough than remaining exams. So we need to prepare according to that only. Okay, if we are able to solve this kind of tough questions, then easily we can tackle our AFM paper. That's why we are increasing the level. Chali, solve this and tell me the answer. Solve this and tell me the answer. Please everyone, try to solve this and tell me the answer. See, I'm giving you the solution also. Okay. In this, you know what is your initial outlay? 20 lakh. Okay. And in this, we need to tell whether to accept or reject. Means we need to calculate the NPV. Okay. We need to calculate the NPV. And NPV says what? Sum of present value of your cash flow minus initial investment. This is the formula for NPV. This is the formula for NPV. Okay. Now, 1, 2, 3, 4. Cash flows 8 lakh per year. 8 lakh, 8 lakh, 8 lakh, 8 lakh. Okay. And what is the present value in this? Discounting rate is your 12%. Discounting rate is 12%. If you think that I am doing wrong, then do tell me that no ma'am, you are doing wrong. Okay. You need to identify that what I am making mistake in this particular question. Chaliye. Otherwise, I am going to solve this. 1 divided by 1.12 for the first year, 0.892. Okay. For the second year, 0.797. For the third year, 0.712. For the third year, 0.635. What is the present value of your cash flow? Present value of cash flow is what? 8 lakh multiplication with 0.892, that is 7 lakh 13,600. Okay? For the second year, 8 lakh into 0.797. 637,600. 8 lakh into 0.712. That is 5,697,100. And 8 lakh into 0.635. That is 508,000. Tell me the answer. So if you add this 713,600 plus 637,600, so your amount is 24,28,800. 28,800. And if you subtract with 20 lakh, okay, if you add this, this will give you the sum of total cash flows that you are going to generate in future. And with the help of present value, we are calculating the today's value. And then we need to subtract with the initial amount, that is 20 lakh. So your amount is 4,28,800. But there is no such option. Means what? Tell me, what is wrong in this question? You are going to accept this. But which option? Which option? Which option? There is no such option related to 4 lakh. So what we are going to do? Tell me, what is wrong in our calculation? Can anyone identify it and tell me? Can anyone tell me what is wrong in this? We are doing correct. We are taking the cash flows present value and we are subtracting with the initial investment. So which option you are going to select? Okay, if you are accepting the projects, means A or C. Okay, so you are saying C. But how come? C or A? A or C? Which one? Which one we are going to select in this? See, we need to adjust the working of this line. Okay, chaliye, let's read this question again. In this, they are saying 8 lakh per year cash flow for the next 4 years. Okay, for that, yes. Now, Priya ma'am got this. Yes. Now she understood that what is wrong in this. Okay. In this, the company required rate return is 12%. Okay. Till here, everything is okay. If till here they are asking, then this method is correct method. But the twist comes from the year 3. That in year 3, especially just in year 3, they are talking about in this year 3. Okay, they are not talking about other years. They are talking about just year 3. Due to market conditions, there is a chances that 50% cash flows will drop to 4 lakh. Okay, and if the company decides to adjust for the risk by using an adjusted discount rate, 15% for year 3 only. Means we need to discount this third year at the rate of 15% after adjusting this 15% chance. So how to calculate that part? Please everyone, let's use this part. Okay. For the third year, I'm calculating for third year. What they are saying that generally for each year we are going to generate 8 lakh. But for the third year, your chances is only 50%. Okay. 50% chances are there that you are going to generate only 8 lakh. Means only 15%, 50%. And for the remaining 50%, you have the chance to earn 4 lakh. This is what we need to do. Okay, this is what we need to do. We need to give the effect of this chances, this proportion. 50% chance that cash flow will drop to 4 lakh. Means for remaining 50%, there are chances that we can earn 8 lakh or we can earn 4 lakh. Now, after solving this, 50% of 8 lakh is your 4 lakh. Okay, and 4 lakh 50% is your 2 lakh. Means overall you can say that you can generate 6 lakh for the third year. Now this is third year value of your cash flow. But we need present value. We need present value of cash flow. So what we are going to do, we are going to use this third year cash flow and we are going to multiply with the present value factor of third year by taking 15%. Why 15%? Because they have already given this. That for third year, we need to use rate of 15% for third year only. For third year only. So what we are going to do in this, we are going to take the present value of third year. And how to calculate the third year present value? How to calculate the present value of this third year? 1 divided by 1.15. Okay, 1 divided by 1.15. 1, 2, 3. You need to press 3 times equal to. And your third year present value will be 0.657. So your third year value will be 6 lakh into 0.657. This is the present value, that 3,94,200. This is your present value. This is your present value of your third year. Okay, so in this we are going to change that part. We are going to change this part. We are going to use the cash flow 394,200. Now tell me which option. Now tell me which option. So for the third year, we need to use 15%, sir. So your present value factor will be 1 divided by 1.15, and then you need to press equal to 3 times. Okay, tell me. Now which option? Now what you need to do? You need to add this. This will give you the sum of your future cash flows present value minus initial outlay. Tell me which option is your right answer. If you add this 713,600 plus 637,600 plus 394,200 plus 508,000, subtract with initial amount, that is 20 lakh, 253,400. Hana? So it is near to your this amount. 253,400 because of some fractions, that's why we are getting some difference. Okay, there will be a difference because of this fractions, don't worry. So the closest amount is your 2,54,200. So correct answer is your option C, that we are going to accept this project because this is a profitable project. I hope you understood that how to solve this question. Chaliye. Let's see the next question. I'm erasing this. Next question. A bakery has received an order for 140 identical cakes. The estimated costs are as follows. Material cost 14,000, labor cost 8,000, and manufacturing overhead 6,000. Fixed non-manufacturing overheads are allocated at 10% of the material cost and 0.25% of labor. Using the batch costing, what will be the cost of one cake? We need to calculate cost of one cake. Shall you solve this? Try to solve this. Now this is an easy one. This one is easy. In this we need to calculate the costing method that is related to batch costing. Please solve this. What we are going to do? We are going to take all the costs, whether it's material, labor, and whether it's some manufacturing overheads. Along with that, we are going to take the fixed cost also. Fixed cost also. And then we are going to divide this by total number cakes. So what is your material cost in this? Your material cost is 14,000. 14,000 plus labor cost 8,000 plus manufacturing overhead cost 6,000. Now, tell me about the fixed cost. Tell me about the fixed and non-manufacturing overheads. What is the amount? Tell me. Fixed and non-manufacturing overhead, that is 10% of material cost. So, first is 10% of material. So, your material amount is how much? Your material amount is 14,000. 14,000 into 10%. That will give you how much? That will give you 14,000 into 10%. That will give you 1,400. That will give you 1,400. And then next they are saying 0.25% of labor. Labor cost 8,000. 0.25%. 8,000 into 0.25%. That is just 20. So your fixed cost amount will be 1420. 1420 divided by how many cakes we need to make? Identical cakes. 140. 14,000 plus 8,000 plus 6,000 plus 1420 divided by 140. Your amount is 210 rupees. 210.14. This is your answer. Okay, you need to use this formula for calculating the batch cost. In case of batch costing, what formula we use? We add all the cost relevant to that particular batch divided by total number of cakes in that particular batch. Okay. After solving this, you are going to get the amount 210.14. So which option? As you can see, if you do the round off, that will be near to 210 only. So correct answer is option D. Chali, let's see the next question. A company reports the following figures. Current assets 9 lakh, inventory 2 lakh, prepaid expense 70,000, current liabilities 4 lakh. You need to calculate the liquidity ratio, and remember, ratios unit is very important. Okay, ratio unit is very important. Surely you are going to see 1 or 2 questions or 3 questions max from this particular unit. So try to give more weightage to this ratio unit. Chaliye. In this, you need to calculate the liquidity ratio, okay? Also known as the quick ratio. Can you tell me what is the other name of this liquidity ratio? What is the other name of this liquidity ratio? Tell me, what is the other name of liquidity ratio or quick ratio? Tell me, you have your exam just after today's Tuesday, Wednesday, Thursday, Friday, Saturday. 5th day is your AFM exam only. Tell me, what is the other name of liquidity ratio, quick ratio? Other name is acid test. Okay? Other name is acid test. So in this, what we do, we use the formula of the liquidity ratio. What is liquidity ratios? Formula, liquidity ratio equal to liquid assets divided by current liabilities. Current liabilities which we are going to pay in next 12 months. Okay. Obligation on us, that is our current liability. But liquid assets are what? Liquid assets are current assets minus inventory minus prepaid expenses. Why we are doing this? Because liquid assets are those assets which you can convert immediately into a cash. So we want that portion from our current assets which we can convert immediately into cash. But inventories, prepaid expenses are not that immediate kind of nature they have. So that's why we need to subtract inventory and prepaid expenses while calculating the liquid assets. Okay, liquid assets are having that nature that they can convert immediately into cash. Chali. So in this, how to calculate liquid asset? We have current asset. Okay, current asset 9 lakh. In this, we need to subtract the inventory. We need to subtract the inventory part, that is 2 lakh. Then we need to subtract the prepaid expenses. That is 70,000. Okay. So 9 lakh minus 2 lakh minus 70,000. That will give you 6,30,000. This is your liquid asset. Liquid asset equal to 6,30,000 divided by current liabilities 4 lakh. 4 lakh. What is your ratio? 6,30,000 divided by 4 lakhs. That is 1.575. Which option? Correct answer is your option D. There is no such option related to 1.575. So your correct option is your D. Yes, correct option is your D, none of the above. Chaliye, let's see the next question. A company considering investing in a new project that requires an initial investment of 5 lakh and is expected to generate the following net operating cash flows over the next 5 years. year 1, 2, 3, 4, 5. ठीक है. The project is expected to have a residual salvage value 50,000 at the end of 5 years. The company uses straight line depreciation over the life of the project. You need to calculate the ARR based on the average investment and select the correct ARR. Options 26%, 35.55%, 32.5%, 33%. In this, we need to calculate ARR. See, under your capital investment topic, see, there are two methods. Okay? In one method in which we use the discounting factors like NPV calculation, IRR calculation. Next way, you can directly calculate. Okay? In that, we read like payback period. Okay? Payback period method we see. In that, we see ARR method. All these methods we use, in which we never use the discounting factor. Okay? There are two types through which you can calculate your capital investment amount. So in this, they are asking the accounting rate of return, ARR, accounting rate of return, which is your non-discounting method, Chaliye, try to calculate this. For calculating ARR, we need to use the formula. Okay, we need to use the formula that says average profit after tax, okay, this amount divided by average investment. This is the formula that we need to use. Chali, tell me what is the amount of your average profit? Can you tell me what is the amount of average profit after tax? What we do in this? We are going to add all this amount, correct? 50,000 plus 80,000. Okay. Next is your 2 lakh. Then 2 lakh. Sorry, 20,000 and 50,000. And then we need to take the average. Average 1, 2, 3, 4, 5 divided by 5. 50,000 plus 80,000 plus 2 lakh plus 20,000 plus 50,000. What is your total net profit amount? That is 4 lakh divided by 5. Divided by 5. That is 80,000. That is 80,000. Okay? Now we need to calculate the average investment. Next thing is your average investment. In this, they are saying we need to take by average investment. Okay? So, how much amount we are investing? We are investing 5 lakh. We are investing 5 lakh, but there is also a scrap. So, we are going to subtract this scrap, 50,000, and then we are going to divide it by 2. As soon as you solve this, 5 lakh divided by 50,000 divided by 2, that is 2 lakh 25,000. This is your average investment. Okay. If there will be no scrap, you are going to use 0 amount. Okay. If they are giving you opening or closing amount, then you need to add both the thing and you need to divide by 2. So there are 2-3 methods to calculate this average investment. Chaliye. So what amount we are going to put here for average profit after tax? That is 80,000. For average investment, 2,25,000. Your amount 80,000 plus 2,25,000, which is 35.55% if you do the multiplication with 100. Which option is your correct? Which option is correct? That is 32.55. Okay. We need to calculate the average. So we are considering that this amount is constant. This amount is constant. That's why we are taking divided by 2. So the correct answer is 35.55%. Chaliye. Next question. A company has the following capital structure. Take it, this they are giving capital structure that equity 10 lakh, preference shares 2 lakh, debt 8 lakh. See, in your books, they are giving only about equity and debt. Okay, but we don't know that examiner may ask anything. So let's solve one question in which you are going to see preference shares also. Correct. So the company cost of equity is 12%, the cost of preference shares 8%, the cost of debt is 6%. The company paid tax at the rate of 30%. You need to calculate the weighted average cost of capital, that is WACC of the company. Chaliye, you need to calculate the WACC, weighted average cost of capital. Do you know what is the formula for calculating this? If you know it, then please try to solve this. If you know the formula, please try to solve this. Please try to solve this. WACC formula. Cost of debt, in which you need to subtract the tax amount into proportion of debt. Okay? In this, if you add the equity, that is cost of equity into proportion of equity. Generally, we use till this formula only. Okay? But suppose in exam, if your examiner asks and gives the detail of preference shares, so how to deal with that? That I am going to tell you, that you just need to add the cost of your preference shares multiply by proportion of preference shares. In case if they ask related to preference shares, then you are just going to add one more bracket. Okay? Otherwise, till this formula we are using. Otherwise, we are going to use from this to this only for calculation of your WACC. Chaliye. So what is the cost of debt? Your cost of debt is 6%. 6%. Remember, in this we need to give the tax effect. So what is the tax rate? 0.30. What is the proportion of debt? Chaliye, tell me, what is the proportion of debt? What is the proportion of debt? Chaliye, let me tell you, the total capital structure means total capital of this particular company is 10 lakh, 2 lakh, 8 lakh, that is 20 lakh. In this, you need to tell me that what is the proportion of debt, equity and preference. How to calculate this? How to calculate this? So this is your revision batch. Okay? This is your revision. Please try to communicate. Please try to tell me the answers. This is your revision time. How to calculate the proportion? For calculating the proportion, we use the debt amount, that is 8 lakh divided by 20 lakh. Means out of 20 lakh, we are holding 8 lakh towards debt. Debt means what? The amount that we borrowed. Okay? So the borrowed amount is your 8 lakh out of 20 lakh. So what is the proportion of this? 8 lakh. Sorry. 8 lakh divided by 20 lakh. Now tell me, cost of equity. Cost of equity is your 12%. That is your 12%. What is the proportion of equity? What is the proportion of equity? Your proportion of equity is 10 lakhs divided by 20 lakhs. 10 lakhs divided by 20 lakhs. How come 50 lakhs, sir? 50%, sir? Okay, next. Your cost of preference shares is 8%. That needs to be multiplied with proportion of preference shares, that is 2 lakh divided by total amount of capital is how much? 20 lakh. Chaliye, solve this and tell me the answer. Solve this and tell me the answer. You cannot take always 60 and 40%. 50 and 40, 50% equity and 40% debt, how much? Acha, I think you are giving this 8 lakh divided by 20 lakh answer. Yes, okay. But in this, they are giving separately the preference shares also, sir. So you need to adjust that part. Okay, that's why we are showing it separately. Correct, Vinay, sir. Chaliye, solve this and tell me the answer. Solve this and tell me the answer. Firstly, we need to solve this part, that is 1 minus 0.3. So 6% into 8 lakh divided by 20. Okay, then 10 lakh divided by 20 into 12%. Then 2 lakh divided by 20 to 8%. Which option? The correct answer is 8.48. Okay. After this, you just need to do the mathematical calculation. You just need to do the mathematical calculations. Okay, chaliye. So, correct answer is your option B, 8.48. This is your weighted average cost of capital. Let's see the next question. A person wishes to borrow 5,000 now and 4,000 after 1 year from now. Both loans require a repayment of equal monthly payments made at the end of the month for the next 3 years. What is the monthly payment? Assume 18% compounded monthly, and these are the options. See, this question is from your IIBF book. Okay. This question that is similar to your IIBF book. So they can ask directly from this. So in this, a person is there who wishes to borrow 5,000 now and 4,000 after 1 year from now. Okay, and then both loans require a repayment of equal monthly payments made at the end of the month for the next 3 years. What is the monthly payments? Assume 18% compounded monthly. Okay, means today this person wants to know that how much EMI he needs to pay. EMI, total EMI, after considering this both the payments. After considering both these payments, what is the total EMI that person requires to pay? So firstly, what we are going to see that 5,000, if we talk about the first or 0 time period. Okay, so 5,000 is your 0 time period amount. But your 4,000 after 1 year means this 4,000 is your first year amount. Okay, 4,000 is your first year amount. But we want to calculate from today only that how much total EMI we need to pay. Okay, what else they are giving? Both loans regards to pay repayment EMI made at the end of the month for the next 3 years. Okay, total 3 years means n equal to 3 years we have. Okay, and apart from this, your R, or you can say I, is how much? That is 18%. 18% per annum. 18% per annum. So as a EMI is what? EMI means what? Monthly installments. Okay, monthly installments. So in this, we need to pay the amount monthly. But this 3 years, 18% is your per annum. So firstly, we need to convert this into monthly percent. So for this I or R, how we are going to convert it into month? If 18% is your per annum, what is your monthly interest? What is your monthly interest in this? We are going to divide by 12. Okay, if 18% for 12 months, so for 1 month, 18 divided by 12, that is 1.5% per month. Okay, 1.5% per month. Then 3 years means how many total months? 3 into 12, that is 36 months. We need to calculate for 36 months, that too equal amount. But one thing is there, that 4,000 is after 1 year. But we need to calculate from today only that what is the EMI? What is the equal monthly amount that we need to pay? So what we are going to do? We are going to bring this 4,000 to your 0 time period. From 0 time period, if we want to know that what is the equal monthly installments that we need to pay for next 3 years. So what we are going to do? We are going to bring this 4,000 to 0 time period. And how to bring this 4,000 to the 0 time period? By using the discounting, by using the present value. So this is your after 1 year. For the present value, what we are going to do? We are going to do 4,000 divided by 1 plus r to the power n. 1 plus r to the power n. Okay, and we need to use this rate, and how many months will be there in 1 year? That is 12 months. So what is the formula we are going to use for the first year? That is 4,000 divided by 1 plus 0.015 to the power 12. Because we want to bring back. Okay, we want to bring this amount back. Please solve this and tell me the answer. To solve this, your answer will be 3345. Okay, means 0 time period, you have 5,000 value that you are going to take, and you know that after 1 year, the value will be 4,000, but today its value is 3345. After adding, your amount, total amount will be 84345. Okay, because we want to know from today only that how much amount we need to take for EMI. So you know what is the formula for EMI? You know what is the formula for EMI? Do you know what is the formula for EMI? If you know the formula for EMI, you can solve this. P into R one plus R to the power n divided by 1 plus R to the power n minus 1. ठीक है? So P amount is how much? 8345. What is your rate? That is 0.015. 1 plus 0.015 to the power 36, because we want to know the EMI for the next 36 months, divided by 1.015 to the power 36 minus 1. ठीक है, चलिए solve this and tell me the answer now. If you're getting somewhat different amount like 50, 60, because of some fraction difference, ठीक है, that is all because of fraction. But if you are near to this somewhere, that is okay. ठीक है, just because of the fractional difference, we are getting the fluctuating answer in this. Solve this and tell me the answer. See, if you find any time that power is very big number, okay, then you cannot press equal to for that much time. Okay, that will be a waste of time. So what you can do, you can use that 36 is what? 6 into 6. है ना? 36 is what? 6 into 6. 6 into 6 is your 36. So we are going to use 6 into 6 for the calculation of power. How? 0.1015. You are going to write 1.015. Okay? 1.015 multiply, and as your power is 6, then after that you need to multiply with 6. So how we are going to use this? Multiply equal to 5 times. 1, 2, 3, 4, 5. Okay? Then again you need to do the multiplication. 1, 2, 3, 4, 5. So what is your amount? What is your amount? What is your amount? 1.709 divided by 1.709 minus 1. 8345 into 0.015. 125.175. 125.175 into 1.709 divided by 0.709. So your answer is B. Yes sir, इतना easy. Wow, because ये आपकी IABF का है. Second, remember this question is from your IABF book only. So these type of easy questions they are asking, and I know you all can do it. That much easy we have. Chaliye. So if you want to get more confidence, okay, if you want to see that no, you want more revision or more confidence, what you can do, you can visit to our Adda 24/7. In this site, you can choose all courses, JAIIB, CAIIB, JAIIB October, and in this you can see Power Pack revision batches. Okay. As soon as you click on this revision batches, you can buy now and use the coupon code that is Y895. As soon as you are going to apply this, you can get the maximum discount of 80%. And remember, if you purchase the same batch from your Adda 24/7 app, you are going to get additional 1% off. But the coupon code is Y895. Chaliye. So with this, I am winding up, but Niharika ma'am will continue this session. So bye everyone. Thank you for joining. Now next Niharika ma'am will come and she will continue this numerical session. So please don't go anywhere. Bye-bye. Take care.
Hello everyone, good evening and welcome to Officer 24/7. My name is Niharika Walia Bhatnagar and I'm with you with the specific area of our JIB October 2024 Accounting and Financial Management for Bankers, and we are on our YouTube channel JIB CIB English Medium. Okay, everyone, that's a very long introduction, I believe. But let's talk about the topic that I'm going to deal with today. I and Aarti ma'am would be taking up the topic of complete numerical in one class for AFM. Acha, before I proceed further, everyone, please share the session, like this session, and subscribe to the channel right away if you haven't done it yet. This entire week is your exam week for AFM as well as PPB. So if you are looking forward to the examinations, please keep a tap on whatever we are dealing with on our sessions, because every single moment that we are dealing in the sessions, we are bringing up something new for all of you. So everyone, let's proceed further. Okay. First of all, everyone, share the session, like the session, and don't forget to subscribe to the channel. Here comes the first question. Matlab na, more or less, I've given the groups in terms of the question so that you can actually see it. The first group is for the journal, then there's a specific group for BRS, there's a specific group for depreciation, so that you can see the topics together instead of having it in a basically in the examination, it's in a scattered form indeed, but when you are practicing, I think I'll be trying to give you all these things in this way itself, so that you, when you prepare for this examination na, when you are practicing through the PDF of this class, you can definitely try it. ठीक है ना? Chaliye everyone, let's start with the particular session. Acha, the first question says, while passing an opening entry, all the assets are dash while the liabilities are there. If we talk about the journal, you must have seen a journal entry, everyone. Under the area of journal entry, what happens is all the assets are on the debit side to your capital and to your liabilities. So technically, everyone, what is going to be your answer? The answer is going to be all the assets are to be debited and liabilities are credited and credited. None of the options are credited and debited. When we talk about the answer, it is basically assets are always on the debit side whenever we have an opening entry. So in this case, it is going to be debit side and the liabilities are on the credit side. Done. Next question, everyone. This question relates to what? This question relates to the specific area of how do we find the opening and closing capitals. Okay, let's talk about the question itself, everyone. The question says that X commenced the business on 1st of April 2013, okay, with the capital of 6 lakh. Okay, everyone, opening capital is of rupees 6 lakhs. In the examination, of course, you don't really have to write down the particular information. All you need to do is plus minus. That's it. Huh? Okay. On 31st of March 2014, his assets were worth rupees 8 lakh and liabilities were 50,000. Find out his closing capital. Acha, this particular question has got opening capital, assets and liabilities, and then you are supposed to find the closing capital. This question can further be converted into one more part. That means this can have two or more case study based area can be there. Okay, you are given the opening capital. Now use the balance sheet equation in this, everyone. If you build up assets, assets are built up either with your own money or the money which you borrow from others. So in this case, your assets are worth rupees 8 lakhs and your liabilities are worth rupees 50,000. If all the things that you have built up, hardly 50,000 belongs to the people who are outsiders. That means the remaining amount is built by you itself. So in this case, the capital part would be what? The capital part is 7 lakh 50,000. है ना? Everyone, if this comes out to be your closing capital, as per the particular method, this comes out to be your closing capital. So why have they given the opening capital? They can also convert this question further into a difficult part. What can be done? They can say find profit if there is no introduction of capital and no drawings. I am assuming that there are no drawings and no introduction of capital during the year, everyone. What is it, everyone? This is basically 7,50,000 is your closing and the opening was 6 lakh rupees. So if you deduct it, that means the money which has been added during the year is your profit of 1,50,000. Done, everyone? That is your profit. There is the specific method in this case that we use is the answer is 7,50,000 first, and the method they are using in this area is how do we find the closing capital, everyone? The formula for closing capital is equal to opening capital plus additional capital minus drawings, then plus profit or minus loss. This will give you what? This is basically the value or the formula for closing capital. If in the examination they gave you this kind of question, that is how you have to pursue. So basically in this particular question, we did two different types of questions altogether. So everyone, if this session is helping you out, please share the session and like the session as well. Okay, which of the following represents the journal entry for interest earned but not yet received, everyone? We have earned the interest but we haven't received it yet. What's going to be the journal entry in this case, everyone? What would be the journal entry for interest earned? See, if we have earned interest as one part, that is clear that if you have earned interest, the journal entries are, the options are given below. One particular thing as an accounting student I learned was never look at the particular options regarding journal entries, because what you will remember in terms of rules is the way that you should always look forward to these questions instead of looking at these questions in this manner ki, theek hai na, let's look at the options and then find the best one. That is now that is not how you can find the best one, to be very honest. So what is it that we have to do in this case, everyone? Interest is something that you have earned, everyone. If you have earned but not yet received, what does this mean, everyone? If you have earned and not received, that simply means that this is basically due, है ना? It's an asset for us. So if it's an asset for us, how do we record an asset, everyone? If there's an asset which is like accrued interest or interest receivable, and this will increase what? You are building up an asset that soon you will have your accrued interest to what, everyone? To your, what are you having but not yet received? You have not received the interest yet. So in this case, what's going to be the answer? In this case, this is your interest income. You are building up an asset that soon you will receive the interest, and at the same time, since this is certain that you will receive the income, so it should be like to interest income. Done, everyone? Chaliye. Now let's look at the next question. In this case, the correct answer is interest earned to cash. Nope. Then interest receivable to interest earned. That is gonna be B. It's not gonna be C. It's neither gonna be D. You know, since we're talking about income, the answer is B. Everyone, what is the correct journal entry for recording bad debts written off? Okay, there was someone who was supposed to pay us, but he didn't. Basically, he was supposed to pay off us, but he was our debtor. But unfortunately, what he faced was he faced bankruptcy. If someone faces bankruptcy, everyone, what happens in this case? If someone faces bankruptcy, that simply means the person will be unable to pay us, है ना? If someone is unable to pay us, then that particular entry should be recorded as a bad debt which is written off. So these are the options A, B, C, and D. As I told you, in terms of journal entries, I never prefer writing down looking into the particular options, because this is more confusing. Think about it, everyone. Bad debts written off, matlab this person was supposed to pay us and he didn't pay. So in this case, what should be the point? In this case, see, bad debt, okay, this is our debt loss. 2, what have we lost, everyone? There was a particular person called debtor who didn't pay us, है ना? So that particular person is being removed from our books of accounts. So is it gonna be bad debts to debtors, as this is basically your, this is going to be your loss, and your debtor, it is decreasing. So if an asset is decreasing, it will go on to the credit side. That's the rule. Now based upon this, the credit debit debtors to bad debt, okay, this is wrong. Then debit the bad debts to credit the debtor, I think this is better. Then bad debt to provision for bad debt. If the provision is created, only then we do this, because C is also there. And then is cash to debtor. This is not done because the person is actually not paying us. You know, we are agreeing that a part of our amount that we were supposed to receive, we're not gonna receive it. Next question, everyone. For the transaction involving payments of the outstanding rent, the journal entry would be, everyone, what is the journal entry for outstanding rent? The person is supposed to pay us. अच्छा ठीक है. नहीं, we are supposed to pay. Outstanding rent मतलब this is our liability. Liability always puts you down. So outstanding rent account is on the credit side. So what comes on the debit side, everyone? It is the expense which is to be noted down. So it is going to be rent account debited to outstanding rent. Done, everyone? Done? चलिए. Everyone, the answer is rent to. Acha, sorry. This was actually the entry for due. I didn't pay attention to this part. This involves payment of outstanding rent. If we pay the rent, everyone, the liability which we were supposed to pay off, what will happen? This is basically liability being paid off. So this is going to be outstanding rent account debited to, we are making payment in cash. So outstanding rent to cash. Done, everyone? Chaliye. So in this case, rent to cash, this is not rent to cash because the rent that he is paying is not a regular rent, it's their outstanding rent. है ना? So in this case, it's outstanding rent to cash. Done, everybody? So in this case, the correct answer is rent payable to cash, because this is still payable, na? Chatkishi. Now let's move on to the next point. A sale of 5,000 was recorded. This is from rectification of errors, everyone. Since a few people were asking at what point of time and how do I actually put it up in the specific area of the questions there. So I have decided that I'll give you the topic wise issue so that you are sorted about this, what is exactly happening. In terms of topic wise, this particular topic is trial balance and rectification of errors. A sale of rupees 5,000 was recorded for rupees 500 in the sales book. What will be the rectification entry, everyone? A sale of 5,000 was recorded as 500. Okay. If we made a sales which is in the sales book, that means the sales is basically undercast or overcast. It is undercast. Something which was supposed to be recorded 5,000, I recorded barely 500, everyone. That means one particular point which is clearly visible is 4,500 on the credit side. This is undercast. ठीक है ना? And what will be the rectification entry? The point is this part is undercast. मतलब 4,500 rupees is less. What should be on the upper side? It is your suspense account. Why suspense account, everyone? Why? Because dummy account has to be created to understand that our sales account is basically done, underdone. Because we were supposed to record at 5,000, we barely recorded 4,500. So in this case, without opening the suspense account, we cannot record the particular journal entry. ठीक है ना? Done, everyone? So in this case, sales to suspense, nahin, this is not the first answer. Then sales to suspense, again this is wrong. Then, okay, sales to suspense, again this is wrong. It is suspense to sales, this is right. So answer is D, everyone. Done? Next point. A cash sale of rupees 8,000 was wrongly posted in the customer's account instead of being credited in the sales account. What is the correct rectification entry, everyone? There was a cash sale of 8,000 which was wrongly posted to the customer's account instead of being... Acha, theek hai. Everyone, I made a cash sale. So basically it was actually the correct journal entry was cash to sales. ठीक है? So if we record it as cash to sales, then what did we do in this case? It was supposed to be recorded as cash to sales, and we recorded it as what? We recorded it as cash to the customer. First of all, this means this is a one-sided error. Why? Because cash part is sorted. If this customer is recorded wrongly, so first of all, eliminate the customer because this customer should not be there. So first part is debit your customer, and the sales should be on the credit side, everyone. That is customer to sales. Done, everyone? Chaliye, then let's move on to the next point, everyone. Acha, this is debit 8,000 credit sales. Nahin, cash and sales is not a part of it. Then customer and credit sales, sales and customer, sales and suspense. What's going to be the answer? It is basically your customer should be on the debit side and sales should be on the credit side. So answer is B. Done, everyone? Got the idea? So let's move on to the next question. A salary payment of rupees 6,000 was debited to the wages account. What will be the rectification entry? Whenever we are doing these kind of questions, always think like the question itself. A salary payment, okay. If I paid a salary, the correct entry is basically salary to cash. And what did we write, everyone? We were supposed to write salary and we wrote wages to cash. So if we wrote it as wages, which was supposed to be salaries, so what do? This wages has to be eliminated. In accountancy, there is a very strong rule that if something is created, you cannot rub it or erase it. If you created a debit side, you create a counter credit side. If you created a credit side, then create a debit side counter there. Okay, so that's how we record this particular area altogether, everyone. So whenever we talk about this part, what's going to be the answer, everyone? So in this case, the particular salary account has to be created and wages account has to be eliminated. So wages to salary, then salary to wages, suspense to salary, or salary to suspense. The suspense account is required only when the journal entry has a one-sided issue, everyone. In terms of only and only one-sided errors, we have to create a suspense account. Okay? Suspense account is created only and only when there is one-sided error. In this case, what's going to be the answer? The answer is salary to wages. Salary has to be created and this has to be eliminated. Suspense account though, if it is written, it means there is a one-sided error. Done everyone? Chaliye ji. Now let's look at the particular answer. Now comes a case study which is based upon depreciation everyone. ABC Limited purchased a machinery for 80,000 and installation charges were 20,000 on 1st of April 2020. The rate of depreciation was 10% on the written down value method. Okay, we bought it on 2020. Now everyone, what will be the depreciation amount for the first year under the WDV method? We want to know what is the depreciation, not the balancing figure or anything else. We're looking forward to it. So if it is 1 lakh rupees, depreciation is charged at the opening value. It is 1 lakh, 10% of it, which is rupees 10,000. So in this case, it is A. This is what? This is your depreciation for the year. Done everyone? Now the next question. The next question says, what is the book value of the machinery at the end of the second year? They're not asking about the depreciation. So in this case, if it was 1 lakh rupees, first year the depreciation was 10%. We were left with 90k by the end of first year. So this was your first year. In terms of second year, you had this 90,000 minus 10%. That means you're left with 81,000. 91,000 minus 9,000 giving us 81,000, and that too at the end of second year everyone. Okay, this is as per the WDV method. Done everyone? Chaliye. Now moving on to the next point. What will be the depreciation amount for the third year? Everyone, first year 1 lakh. This is your balance method and this is your depreciation. First year it was 10,000. A quick way to reach this point is your depreciation is 10%. Your depreciation will decline by 10% as your balance will also decline by 10%. Everyone, second year 90% of it we were left with 90,000. 90% of it in this was 81,000. है ना? First year we were left with this, second year we were left with this. If your first year depreciation was 10k, then second year depreciation was 90% of it. %90 of it matlab this was 9,000. Third year depreciation is again 90% of it, matlab 8,100. So in this case, you're looking forward towards a third year depreciation, everyone. It is going to be 8,100. Done, everyone? That's the concept of depreciation for you. Okay. Everybody, next question. It says, after 3 years, what is the total depreciation charge to date until the WDV? That means first year it was 9,000. Second year we wrote it as 90% of it, 8,100. Third year, first year was 10k, sorry. 10,000 plus 9,000 plus 8,100. So it is 10,000 plus 9,000 plus 8,100, giving us an amount of 27,100. This is your total depreciation. In the questions, they can definitely make it more difficult by selling or buying any of other things. Okay? We can also sell a part of it. Matlab, if we sell, then there would be what? Either a profit or a loss. That can be the difficult part. They can give you a question where there can be a sale or a purchase, or there can be depreciation on the basis of what? In the mid of the year you are selling or buying it. So there would be depreciation that would be partial. You know? That can make the question difficult. So basically doing this question was to help you out with the trick. Okay everyone, another depreciation. ABC Manufacturing Company purchased the machinery for 1,50,000 on 1st of January. The estimated useful life a machine was to be used for 50,000 units altogether. Units of production, and expected residual value is 10,000. Acha, after this particular time, the expected amount that we will be left with is 10k. The machine produced the total amount for the first year it was 8,000, second year 10,000, third year it was 12,000. Everybody? Then they are asking you, this was your case study. Huh? So if this case study is given, then what are they asking everyone? The question is asking us, what will be the depreciation for the first year, everyone? What's the depreciation for the first year? We are having a total amount of 1,50,000. First year we should be having a depreciation based upon the number of units. For the first year, everyone, 1,50,000 is the amount. In this case, it would be based upon 1,50,000 into units of production method states that number of units you produce would give us your depreciation. If you produce 8,000 units, so 8,000 units depreciation word should be there. 8,000 divided by total units that you can produce is 50,000. Once the 50,000 units are produced, the depreciation would be done with it. Matlab basically this is a limit of units of production na. Once it is done, then it's done. Done everyone? Got the idea? Chaliye ji. So in this case, the first question says that it is 1,50,000. That is the value of your machinery. Value of machine multiplied by units produced per annum divided by total. Done? Chaliye everyone. Now let's move on. Acha, there's one more pointer. I forgot to add it up. There is a residual value of 10k. So we are currently at 1,40,000. Then that would be 1,40,000 into 8,000 divided by 50,000. And that is 22,400 everyone. In this case, the correct answer is actually, I forgot to include this part. That is value of your machine minus your residual value or your salvage value. This is your depreciable value multiplied by units of production divided by total production. Acha. They have said that what is the accumulated depreciation at the end of second year. Matlab they want to know what is accumulated total depreciation. First year depreciation we just calculated was 22,400. Okay, first one done. Second year depreciation is what? 1,40,000 multiplied by units of production. 10,000 units were produced out of 50k. That means 1,40,000 into 10 divided by 50. In this case, what's the depreciation? That would be 28k. So 28,000 plus 22,400 giving us an amount of total 50,400. Oh. So this is basically 50,400. Just a moment, correcting that particular part. This is going to be putting it up in the first part itself. It is actually 50,400. Done, everyone? Chali, everyone. Now moving on to the next question. Done now? Now let's talk about the next question, which is based upon CAPM model, capital asset pricing model. Let's talk about the CAPM now, everyone. They say that ABC Limited has a beta. Beta is your sensitivity factor. Your sensitivity factor is what? That is 1.5. The expected return, the minimum return that you are going to make is 5%. The maximum that you can make is 12%. Done, everyone? Okay, when we talk about the CAP model, capital asset pricing model, how does it work? It is basically your RM, that is your return which is based upon risk free. First we say what is your risk free rate of return plus beta, that is from your market remove the risk free part. Matlab whatever includes a risk has to be taken here. Okay, basically everyone, the total risk was 12%, out of which 5% was risk free, so remaining had risk, you know, 7% was your risk premium. If out of total 12%, 5% is without risk, the remaining includes risk, so this is your risk premium. So risk free part was 5% plus your beta was 1.5 multiplied by 12% minus 5%, everyone. So in this case it's going to be 5% plus 1.5 into 7. You know, 1.5 into 7 plus 5%, making it 15.5%. Everybody done? Okay, everyone. Now let's talk about the answer. The correct answer is 15.5. It is 15.5. Just a moment, correcting it further. 1.5 into 7 plus 5. Okay, it is 15.5. चलिए, now everybody done with this point. CAPM model is an important model. पता है, this particular model is also a part of your CIIB as well. So you're gonna continue doing these things in your future as well. चलिए, here comes a specific question on the financial statements of an organization. Everybody, XYZ Limited provided the following information for the year ending March 31st, 2024. Everyone? Opening inventory is given, purchases are given, then closing inventory, direct labor as well as the factory overheads. These are all given, everyone. Chaliye then. Let's look at the particular question. The question says, what is the formula for cost of goods sold, everyone? What's the formula for cost of goods sold? The formula for cost of goods sold is what? Opening inventory plus purchase minus closing. Purchases plus closing inventory minus opening. Opening plus purchases plus closing. Or opening minus purchases plus inventory, which is closing. The basic formula for cost of goods sold is actually opening stock plus net purchases, everyone. Not purchases actually. It's your net purchases, that is purchase minus purchase return plus direct expenses minus closing stock. Everybody done? Got the idea? Chaliye. Now in this case, what's going to be the answer? The correct answer is going to be opening plus purchase minus closing. Done, everyone? Okay. What is the cost of goods sold in the given case, everyone? Based upon the formula. Let's go back and understand the formula there. You know? It is basically opening stock is of 50,000. Chaliye. Opening stock plus your purchases. Purchases are of 1,80,000. Everyone, what about the direct labor? Direct labor is basically involved in production. Huh? So anybody who is involved in production should be a part of it, isn't it? So your opening inventory, which is of 50,000, plus your purchases, which is of 1,80,000, plus your direct labor, which is of 30,000, minus your closing inventory, which is 40,000. What's going to be the answer, everyone? What's going to be the answer in this case? The answer is, let's go ahead and look at the particular options now. ठीक है ना? चलिए. Here comes the options. That is 1,80,000, 1,90,000, 2,30,000 and 2,20,000. So in this case, what's going to be the answer? It is 2,20,000, everyone. Chaliye. Now let's look at the particular question further. The next question says that if the direct labor is of 30,000 and the factory overheads are of 20,000. Acha, theek hai. Everyone, if you look at the particular direct labor and overheads is 20, 30 and 20. In this case, what's going to be the point, everyone? 50,000. We have already calculated 2,20,000. 2,20,000 was our only the portion of what? This 2,20,000 was our cost of goods sold. That included our direct labor as well. Extra 20,000 should be added, which are your factory overheads, which are also related to the area of production there. है ना? So if someone asks me that what is your manufacturing overhead, then can I say this includes this amount as well? So the answer should be what? Everyone? Let's look at the particular options and mark it up. Just a moment. Chaliye. The answer is A. Let's look at the particular question. The answer is A. 2,40,000, 2,30,000, 2,10,000 and 2 lakh. Done, everyone. So in this case, the correct answer is 2,40,000. Correcting it. Chaliye, everyone. Continuing further. There's another question. This is based upon your financial data. This is related to the area of ratio analysis, everyone. Chaliye. In this case, this is net sales, cost of goods sold, net profit. Then comes current assets, current liabilities, total assets, total equity, and total debt. Okay. They've given all these things overall. What is it they're looking forward to, everyone, in the question? Okay, everyone, let's move on to the next point. The question says that find the GP ratio, current ratio, and equity ratio. Okay, let's go for the GP ratio, everyone. What is GP? Your gross profit is basically from your sales, remove only and only your COGS, that is your cost of goods sold. So can I say in this case, this is 5 lakh minus 3 lakh. Your value comes out to be what, everyone? What is the value then? It is going to be 2 lakh divided by 5 lakh. This is your GP, gross profit, the profit that you make specifically from the production, multiplied by 100. This is going to be the point, है ना? Chaliye, let's go and look at the points. That ABC Limited is 25, 40, 35, 50. So in this case, the correct answer is going to be 40%. Right? Next point is current ratio, everyone. What's the formula for current ratio, everyone? What is the formula for current ratio? It is current assets upon current liabilities. How do we find it out, everyone? It is 2,50,000 divided by 1 lakh, giving us a value of 2.5:1, everyone. है ना? चलिए, now let's look at the next point. Last was debt equity ratio, everyone. How do we define debt? Debt equity ratio, always remember, we would be using what? We would be using debt which is only long term. है ना? Long term debt divided by equity would be the point. Just a moment. Hanji, everyone. If we look at the total debt is of 2 lakh. Everyone, how can we find the long term debt? What's the formula for long term debt, everyone? If I look at the long term debt now, see the total debt in this case, let's remove everything else. How do we make our total debt? That is long term plus short term debt. You know, the total debt is of 2 lakh and your current liabilities are what? Of 1 lakh. So in this case, what's going to be the answer, everyone? Everyone? Chaliye. Now let's look at the pointer. Let's look at the point, everyone. Total debt is this. So your long term debt is going to be what? Your long term debt is going to be 2 lakh minus 1 lakh rupees. So when we are looking at our debt divided by equity ratio, it is going to be 1 lakh divided by your equity was 4 lakh, making it 0.25:1, everyone. Got the idea now? Chaliye. So in this case, this is a question from ratio analysis. Module C, everyone. The correct answer is, this is current ratio. Oh. We were looking at the current ratio first, and that was 2.5. Na? I made a mistake there, just correcting it up. Current ratio is 2.5 and your debt equity ratio is 0.25. चलिए, now in this case, where's the point? That is 0.25:1. All these questions, you will find all the particular topics given in the book itself. This is from the book itself, everyone. Okay. Okay, everyone, let's continue further. Okay. Next point, everyone. Acha, this is a question of compound interest. Huh? The question says that there is an amount of 8,000 which grows to 10080. This is your present amount, principal, and this is your future amount, everyone. In 2 years, due to the compound interest, can I say P1 plus R raised upon 100 raised to power n is equal to 10080. This is the formula. Now you get your future value based upon this. Your current value is 8,000 rupees. 1 plus R divided by 100. In terms of percentage, you are at 10080. In this case, this is square. है ना? Now go ahead and divide it. 1 plus R divided by 100. In terms of its square, it is 10080 divided by 8123. है ना? 10080 divided by 8,000. That means the particular value is 1 plus R raised to power n. Or your time here comes out to be 1.26. If this is square, make it the square root. है ना? So, what do? 1.26, take a square root of it. That will give you 1.12. है ना? In this case, the answer comes out to be 1 plus R divided by 100 is equal to 1.12. Then what do you do, everyone? That is R 122 actually. Then R upon 100 is equal to 1.122 minus 1. It comes out to be what? R upon 100 is equal to 0.122, giving you the answer of hold on, visible now, giving you the answer of 12.2, everyone. This is a very interesting question for sure. Here is the answer to it. Done, everyone? Everybody, please, if you like this particular session, if it was helpful, then please share it among your peers. And don't forget to like it. चलिए, everybody, if you're looking forward towards our courses now, after the completion of this class, you will also receive that particular virtual library is also there, from where you can download our question series. ठीक है? Okay, everyone. So that's it for the day. I hope this particular session was helpful for you. If it was, I'm ending this particular point with the compound interest. But don't worry, the numericals are not ending here. We're still left with a good number of numericals. Actually, in this book there are so many numericals. So I tried to accumulate maximum, actually many different types of numericals in this particular session. Not the maximum could be covered, but yeah, we have covered a good number of numericals and good number of points. Acha, now further everyone, if you are planning to look forward towards our courses, then don't wait anymore everyone. The revision class has begun. So the first class was day before yesterday. The day before yesterday I didn't cover much because it was the first session. So yesterday we started that particular thing. ठीक है ना? So if you are planning to purchase our courses, just look at this everyone. Go to our website, that is www.adda247.com. Go to the website, that is www.adda247.com. Go into the area of JIB and CAIIB. Then go on to the area of JAIIB October 2024. Here it is everyone, the revision batch has officially begun. So please make sure you are going through the particular sessions. Use the code Y541 and apply it. If you'll apply it, you will get a particular discount further. Look at this part everyone, use the code Y541. When you apply the specific code, you will be able to get this particular course at 78% discount, 77% through website and 1% extra through the specific code itself. So please make sure if you are planning to purchase our courses, then you are doing it right away everyone. Thank you so much for being there. Please keep on sharing the session, and a reminder, we are meeting you tomorrow at 6 a.m. in the morning for the particular session everyone. Please be there at 6 a.m. for our marathon. That's our final marathon. So please be there at exactly 6 a.m. everyone. Thank you so much for being there. Bye bye everyone, and keep on preparing and keep on learning. Thank you. And if you're planning to purchase a course, hurry up and purchase it right away. It costs you around 2219 I think, 2299. That means 2300 rupees. I think that is something which is worth it because you get all the 4 subjects there. So first part is already done, but 3 subjects are covered. It is just Tuesday right now, so I think you still have a good number of days left. So make sure every single day